Good afternoon. It's 1:57 p.m. So we actually took a trade in the morning at around. Actually, it was in the before noon at 11:30. We took a trade, and it immediately went to break even, and then it went back up, and then it went back down, and then went back up again. If you see, this is how uh, it was today morning. Okay, so actually we have this rule, right? If there are three order blocks, the first one is invalid and the rest two are equally valid. Okay, um, but then usually what we would do is we would take the trade here, but I used my discretion, which is allowed as per the rule, and I took a trade here. And the reason being, um this 1 hour order block is not the end of the swing, because yeah, as you can see clearly, it's not in the end of the swing. This is the end of the swing, and if you go there, there is a clear 15 minutes order block with a tiny gap. Okay, and we place our order there, and immediately, like in the same candle or in the next candle, we got a break even point, and then we broke even, and that's it. We we broke even, and now it's going back up. Okay, so maybe we can. I remember we had a phase where we thought we could just close the trade at 1:1.2. We are at that phase right now, but I still think after commissions we'll be making very less, so it's better to stick to 1:2 itself. And we did the calculation. If you see, it's 37R and this is 30R if we use this chance, but then the win rate increases 65%. We'll win, and our R multiple will be only around 30. And if you remove the commissions, which is around 20%, will be with around 25%. So sorry, 25R. And if you remove commissions from this, will be around around 30R itself. Something like we'll be down by we'll be down to 20R or around 22 or something like that. This will be around 28R. So obviously this is better. Okay, but this is calculated for 1 hour. Like let's say if it was 1:1.2, then maybe we would have a little bit more, obviously not as much as this, but then we'll have like around 0.2 into, yeah, so we will have around 35R or something like that. But this is assuming that every single trade that went to 1:1 actually went to 1:1.2 and then only came back down. If that is the case, if every single trade that I took went to 1:1.2, every single break even trade went to 1:1.2, then this is actually a better thing, because we're just 2 hour behind, and and we have a higher win rate, so we'll be much more confident when taking the trade. And in situations like this, like especially in situations where it's kind of choppy, like in these kind of markets, we can't be so sure that there'll be a huge movement. There'll just be a small movement and we'll have to capture that. So in these kind of situations, we all will be getting is 1:1, 1:1, 1:1. It'll go and then reverse, go and then reverse, go and then reverse. So in these kind of situations, we'll be losing our money to commissions. But instead, if we take the profit at 1:1.2, then we'll be making some money. So we'll have to again backtest and see if every break even trade is 1:1.2 or it was just bullshit. Okay, we have another trade setup coming here. Okay, GBP USD. So what the idea is that there's an order block here. If you see, in 15 minutes we have an order block just below the Tokyo low, and it did not give us a 3 candle reaction, or I don't know. Okay, I'm just taking it anyway. Okay, because it's below swing point. I'm using discretion, obviously. Okay, this is not previous day's low, but then it's previous day's low, okay. And there's an order block here, and right below that there is an order block. If you see, there's an order block here, okay. uh, so it also swept this liquidity, so it has to be high probability, I guess, okay. And yeah, I placed an entry here in GBP USD. If you can see, I placed an entry here, so we'll have to see what happens. And if you see Euro USD, we have planned so basically this is previous day's low, and then there's no order block whatever here, so this entire thing has to be liquidity. And this is entirely accumulated swings, so maybe if price comes all the way here, we could take a trade here if this happens today. But if it happens tomorrow, then we'll have a different type of liquidity point. It could be Tokyo low, it could be previous day's low. Let's see that. So yeah, this is the plan for the day. So yes, we got into that GBP USD trade, but I'm thinking mostly it's going to sweep this low, tap into this order block, give a small reaction, and then keep continuing lower. But is this order block significant? No, because it's not accumulated lows maximum 1 2. Yeah, that's all, just 1 and 2. So our plan is to take this trade. Whatever happens here, just deal with it. Euro USD, do we have a trade? No, here as well we do actually have quite a few lows, but then all these lows are also liquidity, so it could go down till here, okay. And also because the price is extended, maybe or mostly it could go down further and then go back up. Then as of now, gold is still doing the same thing, okay. USD JPY continuing to go up. So yeah, let's see what GBP USD does, okay. Let's mark the 1:1 and then mark the alert, and in case it goes there, we'll see what happens, okay. Bye. Okay, good evening guys, it's 5:13 p.m. and the trade we took in GBP USD, we just won the trade. Yay, we won the trade. But if you see our in my opinion the Excel sheet, Tokyo is very far away from the order block. Also the order block is slightly insignificant. What I meant by insignificant is that it is actually a very good order block. I'll tell you why. Because it swept the double bottom, okay, and then it is below another order block, so that means it is the reason for two types of liquidity. One is present liquidity and the past liquidity. So this was a really good zone. Actually, it's a very good zone, but the thing is, if you see, we have Tokyo low, and then we don't have a 3 candle push to the upside. Instead we have a single candle push. It did not come in and then go out. So this was still valid, and it's not a previous day's low. Previous day's low was already swept by Tokyo. So it was a bit confusing, but actually it was the trade we were supposed to take the trade, okay. And this is why some discretion should be allowed, but not all the time, okay. So and here I actually instead of taking the trade here, I took the trade here because this was too big, okay. So yes, out of fear, but at the same time, yeah, let's just say God forgave me for this. He let me take this trade. It went all the way here and went there instead of tapping here and going there. It's just our guess, okay. But then the rule is we should have taken here. But even if we took it there, we would have won. So doesn't matter, okay. I mean, it does matter in psychology, but it doesn't really matter as per the results. Okay, so we basically won today, and there are no more opportunities available, so we could consider this day green. So we had a break even in USD JPY, and we won in GBP USD. So yes, and yeah, we also uh, risked 580 rupees instead of 500 rupees, and also that's also because you know it was that type of volume. If you can see, uh, if not 580, we'll have to take some 430 or something like that. Yeah, 430. So I didn't want to do that, and anyway we are supposed to be risking 600 rupees per trade because we trade only uh, four pairs. So we'll have to split that uh, number of trades and amount of risk with the four pairs instead of five pairs. So that's why we'll have to increase our risk to achieve the same uh, weekly target. And as of now, we have almost hit our weekly target. We just have a little bit more, around like if you remove the commissions, I think we still have around 200 rupees left uh, to hit the weekly target. But does that mean after hitting the weekly target I will just sit chill? No, that's because previous week we had nothing. So that means this week uh, it should compensate the previous week, and also have more profits for the next few weeks, which could be however it can be. So that is why we don't stop at weekly targets, but then it is just a target to try to achieve. So I think that's it for today's video. We are done. There are no more opportunities. If you see, uh, these are the accumulated lows. I marked them wrongly. These are the accumulated lows. So it has to come here and tap and go, but then it's very old accumulated lows. So that is also one thing. Okay, if it comes in today, we could take, but then there's no momentum to go all the way here. There was no order block here, so no trade. No order block here, no trade. But then there is something here. But then, if you see, actually London low, Asian low was swept, but not a 3 candle, just 2 candles. Yeah, so we'll see what happens. Okay, and the previous day's low was already swept by Tokyo low, so no opportunity here. GBP USD done. USD JPY previous day's low is here, Asian low is here. Both of them got swept and it did its job, so done. Gold, we are still not sure of what the direction is. Okay, so we have to wait until we get some sort of breakout or some sort of trend continuation. So if you can see, we have 1 2 3 4 5 6 point swing, so it is bullish, but now it broke down, and you cannot consider these swings as important swings, or even if you continue, you can consider them. And we have 1 2 3 4 5 6. So when we were here, we could have been bearish, but then again it went back up and broke the previous swing. You can call it change of character, but change of character means nothing until a new trend is formed. Okay, so we'll have to wait for that. So as of now, we are we don't know where the trend is going, so it has to break to some side. If it goes down, and we can consider that it's continuing to be bearish, or if it breaks to the upside, then we can consider the previous trend as the real trend, or if it's still confusing, we can just wait for the 6 swing pattern to form. Okay, that's it. Bye.